Hello. Okay, good day everyone. Thank you for coming into this YouTube channel, Trade Live with Precise Trader. Today is 19th of September and US session, and now we are going to do focus trading. Okay, before we move on, let's look into the risk disclosure. Day trading in foreign exchange is risky. Past results are not indicative of future returns. The content on this webinar is mainly educational purpose. Use your information entirely at your own risk, and you must assess the risk of a trade with your broker before you put in your trades. So with that, we move on to our live analysis. So the key data, in fact, today we had a BOJ interest rate announcement, which was forecast was less than 0.5%, and I think came out to be as expected. They did not do any changes to the interest rate. Then after that, I think we had a monetary policy statement. Then in the afternoon, we had a retail sales month on month from the GBP, which is forecast was 0.4 and came out to be 0.5. Then after that, we had a press conference from BOJ, and earlier we had a retail sales month on month from the Canada. So that was forecast was negative 0.4%, but came out to be worse than expected, which was negative 1.2%. So then after that, I think we move on to our live trades. So so far we don't have we only have a trade sell, which is a gold euro, which I think most likely is going to get stopped out. So let it get stopped out, then I think we will go for a re-entry again. So now before we move on to the new trades, I think it's best we look into the market, analyze the market, then we see how we are going to manage our trades or get into the trades for the next couple of hours. Then how are we going to move forward? So from here we start off with the gold US. Okay, the gold US, okay, it seems honestly, if you ask me now, trading has been pretty difficult, these days, because market can change, and especially we can get a big moves happening within a short duration, meaning to say that within 10-15 minutes, you might get like $30-40 move, especially if you are not aware, and especially if you don't. And at the same time, I think it's best for us to never trade without any stop losses, because we can't afford to take that risk. The moment once it goes against, then it would be pretty drastic, and at the same time we would be losing a lot, especially if you go on high volume. So that's why what we have done is we have planned our entry on staggered basis. Okay, staggered basis, that's one. Second thing is, when we put in our trades, we have usually three or four types, four entry levels. Okay, we call it first entry, second entry, best entry, and even sometimes we have 1, 2, 3 entries, and the best entry can be near the levels. So, and the same manner, when we put in very less sound. Okay, just give me a minute. Hello. Okay. You see now? Is it better? Because I put my mic quite close. I hope you can get it. Is it better now? Hello. Okay. So anyway, I repeat. So what I was saying was, okay, we should be because the reason why I want to tell you this is because we are not going to enter now at market, because we are waiting for certain levels. Okay, thank you. Okay, now what I was saying was when we take a trade, so we go on staggered basis, and the rule of the game is, okay, you must understand that there is no way we can trade without being stopped out or without being hit the stop or losing. There's no way. I mean, there's no one in this world can do it. So the simple rule of the game we should apply is, okay, when we lose, we try to lose the minimum. When we gain the maximum. So at least our so-called our equity is still within control, and we do. Okay, so now let's move on. I think there was an order got filled, so I just want to share with you now. Okay, let's see. Okay, now today's high we had at 61. Okay, so now we have taken a trade, just took the trade at 58. Okay, we have just took the trade at 58, and the stop is above the 62, which is your current high. So maybe we can raise it that to 63. Okay, so we'll just do this thing first, then I'll give you more information. Okay, now, so we have taken a trade, we just took. So of course, if the current day high, which is 61 half, is going to be the high, then chances are it's going to come down. But if let's say, okay, if let's say the price breaks the high, then I think we are going to lose that trade. Then we go for a re-entry. So now let's get back on the discussion. So now what we see is, okay, as far as this pattern, the price action, all are concerned. Okay, all these are concerned. We should not see if we are bearish, because what we feel is the price has turned down on the hourly and daily, and price is expected to test the 3612 or even lower. Okay, so this is what our view is overall on the bigger picture. So on the near term, okay, on the near term, on the nearby, what we feel is we should be maintaining this bearish view as long as the price doesn't break that 72. Okay, just give me a minute. Just give me a minute. Just have to see. Okay, just give me 1 minute. 1 minute. So 63. Okay, so now so if as long as the price doesn't break this high, okay, so we should be expecting the price to turn down, and the only clue we have is we have yet to see the low. Okay, we have yet to see the low, and now we are seeing a correction up, so we are planning to go for a short. But of course, that 72 is a very critical level. 72, 75, let's say we'll take it as 75. So of course, when we prepare the trade, we must also prepare at all angles. Okay, meaning to say that, okay, in the event that 72 breaks, then how far it can go. That means we have to prepare for the next level. But as of now, we feel that the price is not going to break 75, and we have seen the temporary high at 61, and right now we are looking at a 6-hour chart. This is trading below the open, so all the signals are pretty safe for the sell as of now. But the only clue is, okay, have we seen this is this going to be the high, or we are going to see the price testing the high at 72 or even higher before this market turns down. So that is the thing we need to find out. But sometimes it's very tricky, because you see, if I know that the price is going to go this high for sure, then I don't have to take this trade and I don't have to take this risk. But on the other hand, if I'm not sure, okay, whether the price is going to break this high and go higher, or the price is going to turn down from here, so that's why we have to go for a different volume and different staggered levels for entry. So now, if you look at the 2-hour chart, so right now this market is in a congestion on the 2 hours. So all I know is, okay, I have another 19 more minutes left for this 2 hours to end. So at least I still feel that this is high, is going to hold, and we should see the price coming off, within the next after the next 2 hours. So now we look at the 6 hours is still trading below the open. So the overall, the longer time frame is still telling you a weakness. The near term is telling you there is strength. So we expect this market to turn down. Okay, now if we look here on the 15-minute, so this 15-minute is telling us that probable this might be failed and we should see the price coming down again. Okay, so if that is the case, then we have taken 0.3. So now we want to try one more because if we feel that this is going to be the high, and the signals are telling us that this is should be somewhere the high, so then we expect the price to go down. So then we will try to go for another add-on entry at somewhere near 56 with a stop above this high, okay, which is 60 or 61. So now, since we have already taken the trade, just now we shorted at 58, this is making money. So now we are going to go for another entry. That's why you see the reason why we go on a staggered basis is this is what. So sometimes when we want to decide on the close, we will put a different stop, so things would be heading. So we'll put at 56 and a volume, a very low volume, because we already had another entry at 58. So we are going for another entry at 56 since we feel that the price may have seen the a temporary high. Okay, so we have now two entries. Okay, we have two different entries, shorted at 56 and 58, and we have two different stop loss levels. Okay, always try not to put the stop in the same level, so in the event if let's say we get stopped out, then we lose both, and sometimes we get triggered. So the same manner, when we do an entry, we'll try to be in different levels, so at least when one is making money, we can decide to close. I mean, there are different approach you can use. Like some people, they believe they take on partial profits. So that means like you take a trade, then once it makes, then you go on partial. It's all the way which you approach and the way you do things. Okay, so now we have taken two trades. We are betting that the high is seen, so let's wait for the outcome of this. While we are waiting, let's move on to the the other one, the gold euro and the gold Aussie. So when we look into the gold euro and gold Aussie, you see this shows a different pattern. Okay, so if you see here, the gold euro, this is trading above the open and above the previous high, which means to say that the gold euro is slightly stronger than the gold US. Okay, the reason being is because the US dollar against the euro is a bit weak. So now when we look into the 2 hours, so this is telling you that this is also testing the previous high. And when we look into the 15-minute, okay, now we get a clue that okay, this might be the high. So now we want to sell at market. Okay, try to sell at 10 or market and put a stop above this and go for a very low volume. Okay, quickly go do that. So we are going to sell gold euro at market. Okay, because we felt that the the high may be seen. Okay, let me see this. Okay, so so now we have two entries. Okay, the same thing. Let's quickly look for gold Aussie, see whether the high is seen. So the 6-hour chart, this is also in a similar situation as gold euro. Is testing the previous high, and now the 2 hours is going to last for some more. Then when we look into the 15-minute, so this is also telling you that most likely we may have seen the high. So I want to go for another sell. Okay, low, just go for a small volume and sell at market. So I have just going for a 2. Then of course, if the market goes higher some more, then we can go for a sell some more. Okay, so now we have taken different levels, and overall the gold euro and gold Aussie are telling us that the market is trading above the previous high, so we got to be careful on this too. But the gold US seems to be a bit weaker compared to the other two, so we will wait to see the thing. Okay, now where do we put our stop? Okay, this one we will put above 51. We will discuss in detail, how we are going to manage this trade. So this one is above 15 half. Okay, so we have put in the trades, and we have put in the stop. Then let's discuss this in detail. Okay, just give me a minute because I want to key in a sell. Okay, so now we are good to go on this. So now we are going to manage this trade, and we are going to see what is the maximum we can get. So now we have 2 entries on the gold US. So we are going like half lot sell. So now let's discuss this in detail, because the other one is euro. I think we have entered 2 also. So then the Aussie is only 1, so we can do that later. So let's do the gold US first. So let's discuss that in detail, and then we would see what do we expect and how we can manage this trade and try to get the maximum profit. And if we are right, then of course if we are wrong, then we try to play the minimum price, then we try to re-enter again at a better level. So now the time has just started. So if you look into this, okay, like I think early on I said that 2 hours is going to end in another 10 minutes. So it means to say that this strength should be lasting for another 10 minutes. Then after that, a new time should come into play, and that time should show weakness if we are right. But if we are wrong, then probably we may get stopped out. Then we have to enter at a better level. And right now we are betting that this high, this is going to be the day high. Okay, that means 61 or 63. So right now the market is moving against us. So we have another 10 more minutes to see whether the price is going to turn or is going to go further higher. So now let's assume, okay, we are going to go with a tight stop, and let's say we get stopped out. What would be our re-entry? So now the re-entry, what we are looking at, remember I said that the price should not go above 72 and 72 or 75. Of course, if this level breaks, then we got to project a different level as the high. So there's two possibilities which we can do. One is we can go for a re-entry somewhere near 63, or extension of this level which is 66 or 68. So assuming, if let's say we get stopped out, then we go for a re-entry at 68, then put a stop above 73. But once the 73 breaks, then we are wrong. Then of course we got to go for the final call, which is a different level. So let's sorry okay, so now let's see whether the market is going to turn, and we have another 8 more minutes. Okay, we got to see another 8 more minutes. Then we see either the market will be turning from here, that means within that 8 minutes, or it may extend towards 68 or 70, 72, then it may turn down. So these two are at this moment, okay, this both are possible. So we will try to play the game as this two as the possible. That means you get stopped out, then we'll go for a re-entry. So now what we are going to do is, okay, now I've got a re-entry at 66. Okay, let me show you the chart. So we are putting in a re-entry at 66. Then we have put a stop at 72. Okay, 72 actually you should put above 75. So if that's the case, then probably we should raise it to 68. Then we'll put a stop at 75. So this is going to be our re-entry. So let's monitor this closely. Then within 7 minutes from now, we should be able to see the results, whether we are right or we are wrong. So now we have a buffer entry for gold US. Let's say we get stopped out, we will go for a re-entry again. The same manner, we have a buffer entry for gold euro, selling at 3128. Okay, this is also a 0.2 lot. See, what we will be doing is, usually first entry we'll try to go with a very small volume. Then we'll go for add-on entry like just now we did on the gold US. So that means once we see the market is giving us the signals what we are expecting, then we will try to go for add-on entry, and that's how you can maintain with the minimum loss and maximum profit. That means when we are right, we get the maximum. So let's wait for another 6 more minutes. So either we may get stopped out, then the market may start falling down from here, or it may get stopped out, the price may push towards 68.72, then market may turn. So these two are the most likely possibilities at this moment, but we have to wait to see whether we are right, and we got to manage the trade accordingly. So we have 5 more minutes. Okay, just give 5 more minutes for this trade. Then by then we know that whether we are going to be, since we have 5 more minutes and we have a market is trading near this. Okay, now you see this gold Aussie is going to get stopped out. So maybe this one, I think I want to raise it to 64, just $2 away, because it's within the 5 minutes we should see the price turning. So this one also I raised by $2, because I don't want, because what happens is most of the time, our levels are so precise that sometimes you get stopped out, then the market quickly turns down. So we will just wait to see whether we are right. Then of course if we are right, then we try to get the maximum. So let's wait for another, hold on, let's see. Okay, so let's wait to see. So I think looks like we may get stopped out. Okay, out. Okay, we are out. So now we got to go for a re-entry again. Okay, so this is the problem. Sometimes when we enter on projected levels, okay, what would be happening is we would be getting the best entry sometimes. Sometimes we may get stopped out a few times. So then as a result, then we have to go in again. So now we have, okay, I think all the things are stopped out. So now we will just wait for a re-entry. So now let's see. So now we only have the gold US. Okay, now let's do the trade again. Okay, so looks like, okay, market is not made. That means we were betting that this is the high, and we were expecting this is the lower high, and we were expecting the price to break lower. So now looks like this is out, and we are going to go for a re-entry again. So now let's do the work together. Then we will see where is going to be the re-entry. Okay, now if you look on the daily, okay, now if you look on the daily, so if we are right, okay, the previous high, okay, the previous day high, that 73 should be holding, and we should see the price coming off from this level. And now today is being like a range day, so that means to say that this, now the low is seen, now we are waiting for the high. So the next one we can do is, we are planning to go at 68. So the next level of target, if let's say that 73 is 75 is also being stopped out, then we should go for a re-entry at 90. Okay, let's see whether we are getting the same answer. So the problem would be, okay, let's say this is going to be extended. So the next, if you see this price is extended, we should not see the price going above 78. Okay, we should not see the price going above 78. So now the market has break the high. There will be only two possibilities now. One is either the price may go up towards here, turn down, or it may be a failure, a fail break, then the market may come down from here. So both are possible at this junction. So we got to get ourselves prepared. But since we got stopped out on like too many things, so now we got to play the game a bit conservatively. Okay. So now, because the new time has come in, remember I told you I'm expecting the price to come down from here. So now, since we already got so many stopped out, let's try our luck to just take one trade at least, to regain our losses. So here, if again we got stopped out, then I wouldn't want to fight again. So then I'll wait for the next level. So what I've done is I've taken another trade, hoping to see. Remember I told you, okay, usually whenever we take our trades, usually the price, if it is happens to be a stop loss level, then it should be turning from that level. Okay, so we are not going to go for all right now because we already got stopped out. So now we will put this stop at the above the high, maybe about 66. So if we are right, then of course we would be making money on this. That will help us to take our losses back. If we are wrong, then we pay again a price. Then the next one we should be going for 68 and 70. So since this is quite near, so now I want to raise it to 70, and this one I'll go for 78. Okay, so now we are already stopped out. See, every day, see the rule of the game, we should be playing the game is every day we try, every day we go on staggered basis, then we'll try to catch the big move when we have an opportunity. Sometimes when we get stopped out, try to just pay the minimum damage. Then of course when we get back, we'll try to gain the maximum. So now while we are waiting for this trade, let's see whether the gold euro and gold Aussie are giving us the move what we have expecting. Okay, the gold euro, like as I said, the 2 hours is still showing strength, but your 15-minute is telling us that most likely this might be the high. Okay, I don't know. Okay, now the Aussie is also telling us the same thing. Okay, but the hourly is showing weakness, the 2 hours is showing strength. So there is a contradicting signal here. So if that's the case, then I think I want to try one more. Okay, one more attempt to see whether, because sometimes we cannot be giving up. We cannot be giving up in our trades once we go hit or wrong. Okay, so I want to sell another one, just the gold euro, though I'm not going for a gold Aussie. So I will try to see whether this is going to be the high. Okay, if this is going to be the high, then if this is the high, then of course I will be making back the losses. If not, then I pay a price again, then I'll go for one more attempt. And usually we will do it in such a way that we don't try being stopped out maximum 3 to 4 times. Okay, maximum 3 or 4 times. The moment once we get stopped out more than 3 times or 4 times, then we will stop for the day. But of course we will do it with the planning and with not just blindly. Of course we are looking for a high probability trade set up. So then the moment once we are right, then we get back our losses. So most of the time, so that means when we really look for a big move, we get it. Okay, we might even make sometimes even 4-5% or even 8%, sometimes, but it doesn't always happens, because now trading is not that easy and that simple. So we got to stay focused. Then we have to see for the maximum target, then we will try to get back. Okay, so I think just now the equity was about 53,600, so now we are losing still about 500. So if we get about this 500 back, then I think we are back on track. So at least we don't end the day on negative, and we will try to and at least break even or with the minimum damage. Okay, so now let's go and reassess the trade again. Okay, so now looking at this, okay, right now this price is trading above. So I told you what we expect is we should not see the price going above the yesterday's high, which is 73.5. And today's high, we should see around 63.5 most likely. But if we can go up further, then it can extend. Okay, let me give you the final target. So that means we have a resistance at 65, then we may get a resistance at 72. So that means this price should be turning either at 65 or 72. But of course, if it breaks beyond 72, then we are wrong. Then we will go for one final attempt. Okay, so just now the first time we got stopped out. So morning we were making money, so it's just that from the profits it's gone. So now we got to go for a re-entry. So at least we we try to get back on track. So now, as far as the signals are concerned, okay, this is trading, the new time belt has just started. This is trading below the open, and right now I see there is a possibility that this might be the high, but again, nothing is certain until we see confirmations. But how do we know whether this is the high? We need to see the price going below 59 and 54. Then we can confirm that this is the high. That means to say below this level and below this level, okay, 54 and 52.5. Then we can confirm that this is the high. Until then, nothing is guaranteed. The price may start to turn up again. This might be a pullback, so we have to wait and see, and to see whether we are right, then we will go for additional trade, or we may decide to just book the profit on this trade. Okay, so any questions? I hope you try to understand our system. Okay, there will be a lot of checks we are doing indirectly. Okay, like for instance, like when we place the trade, we will trade with an expiry time, not like any time. So we have a different volume entry. So usually our volume entry is 0.2 whenever we try to hit near the market. Then the next level would be 0.3. Then the next level is 0.5, and the next level is 0.8 and one lot. We will seldom go one lot at one go because that can be quite dangerous. But of course, that one lot would be the least risk. Okay, our system is designed in such a way that Our system is designed in such a way that when we make, okay, we make the maximum. When we lose the minimum. So we can afford to get stopped out few times. Okay, like just now, I said, like just now when we started, okay, we are losing about 500. So 500 is 1%. 1% we are losing from the account. So usually maximum risk we take is not more than 2%. Okay, so we'll stick to the rules at all times. The moment once we get on the wrong side, then we will try to manage risk, reduce risk, then reduce the lot, everything. Okay, so now we got to see the first 15 minutes. Okay, you see here right now the first 15 minute is going to be a down move, which is a good sign for a sell. So the next 15 minutes we should see this low break. That means we should see the price lower low and lower high. Then we can confirm that, okay, we are in the right track. But let's assume the next 15 minutes is going to be in a congestion or range. Then we got to be a bit careful. Okay, maybe the next 15 minutes it might be in a range, then the following 15 minutes may come down. But whatever is it, we have to have a check and eye that the 59 has to break. Then we can be on the safe zone. Okay, until then nothing is guaranteed and nothing is proven. So we have shorted at 63, and this round we are not going for any add-on entry. If you notice, okay, we are not going for like a sell again like the first trade we did, because we need to see this confirmation and we need to see whether we are right. Okay, so let's wait for another 3 more minutes. Then the next 3 should be giving us an answer. Okay, so if we are right, if this is the high, then we should not see the price going above 63. Okay, above 63, and this low has to break. So when we see this, trading becomes a bit easier. Easier to take decisions, easier to manage. You have a plan, then you do it as a business. Okay, not as a gambling. So you do it with a proper plan, and the execution has to be done in such a way that you do it so at least you are in the right track. I mean, of course, every day is not a Sunday. You cannot make money every day. So but you keep on trading every day, then you know that the opportunity will come one day, and that's where we make good money and big money. Okay, the view for dollar yen. Okay, the question is, okay, while we are waiting for this trade, okay, let's see whether the 59 breaks. Until then, I think we still have another 1 more minute. So until then, let's discuss the dollar yen. Okay, the dollar yen. Okay, you start off. Today was the rate announcement, and rate announcement, and it was unchanged. Then I did not read what was the press conference after that. Okay, but usually I don't look at it then and then, but as and when needed, then we'll go. So now when we look into this, the trade here, it shows a congestion on the daily. So that means as long as the price doesn't break that 48.30, the market is expected to be in a range. Okay, this is on the daily. So when we look on the 6 hour, this is also giving us the same picture. So it means to say that, okay, now we can go for a sell with the stop above this, and we should exit before 47.20. So that means we have another 60 pips move that is available now for us to utilize. So now if you look on the hourly, okay, hourly, this is showing market may have made a top on the hourly, so we are expecting this low to break and price to move further down. So now finally we look into the the 15-minute. So if you look into the 15-minute market, you should know that you should be exiting before 47.20, and always remember that when we put a trade, the stop loss must be placed in such a way that you don't get stopped out when you are right, and you only get stopped out when you are wrong. Okay, then the TP should be placed in such a way that you should be able to book your profits. So in other words, now if we're looking at this chart, I want to exit before 47.20. So now looking at this, 45 seems to be a stronger support, so probably I'll be exiting at 45 or 48 or 50. So now I should be looking to go for a sell at 48 with a stop above 48.30. Okay, so now I want to be in the trade. Okay, now you decide, you say you want to be in the trade. Maybe I want to take this trade as well. Since we are discussing this, I want to take this trade as well. So now what is my plan is, I'll be going for a two-tier entry. One is I'll try to sell now at the market, because now this is 2 hours still seems to be weakening, and we should see the price down for another 45 minutes. So now what I'll be doing is I'll try to sell a half lot at 90, another half at 48.05 with a stop above this level, and exit at 60 and 45. Okay, so let's put this trade. Since we are discussing this trade, I want to trade this, and I also see as and when we get an opportunity, okay, we got to capitalize on the opportunity, right? So now I want to sell half. Okay, I'll sell at market. Okay, then I'm going to put another sell. Okay, another sell at selling at 48.05. Okay, but the problem is, I'll put an expiry stop loss at 30 pips and a TP at 47.60. Remember, we got to exit before 47.60 and 45. So we'll put an expiry about 2 hours from now. That means either the trade is get filled in 2 hours from now, then we will get it filled. Otherwise, I'll just cancel this trade. So now I need to put this stop loss. Okay, I'll put the stop at 48.25 above the second entry level, and I'll put a TP at 50. So then I'll just let it work. Okay, I'll just let it work. So this is how you do. I mean, when we take a trade, try to have a plan and try to stick with the plan and move on. As long as the market is responding to our call, we will try to stay in the trade. If it's not, then we'll try to get out. Then we'll try to go for a re-entry. Okay, so now the gold US, I think this is already giving about $5 move. So I think we were right in not hesitating to take the trade. So now let's discuss this to see where we want to do, whether we want to do any re-entry or whether we want to go for exit. So I repeat, if my equity becomes 53,600, then I'm break even. So I'm looking for another $400 loss, which I need to regain. So let's discuss this again. Okay, now if you look into this, okay, this is the hourly, this is showing weakness. So this weakness is expected to last for another 40 minutes. Okay, so either I exit at 45, okay, 45 or 52. Okay, 52 or 45, that should be your exit point. And this should be for, I should be holding this trade for another 40 minutes. Then I must also make sure that my 15-minute doesn't go above this level or this level. Okay, I think we had a stop at 66. So since I've got, there's two ways which we can manage now. One is, okay, we can decide to take a profit for this trade either at 55 or 53 or 50, 51. Another way is we can go for a add-on entry selling at 62 with a stop at 65 half. So if this is going to be high, all I know is this this weakness is going to last for another 40 minutes and I should exit before 40. Just now I gave you the price. I should exit before 45. Okay, so now what I'm going to do now is, remember I have incurred a loss. I've been stopped out. So I would, maybe I may want to go for one more, because I instead of going for all the three, I may want to go for one more sell at 60 half with the stop at 65, and this one I'll try to exit at 53. Okay, so let's manage this trade. So here okay, I'm going to take my TP at either 53 or 55. Okay, then I'm bringing my stop loss to cost. Okay, so that means if let's say the market bounce back, worst scenario is I may not be making the profit, but I may not be losing much. Okay, then since I have another 40 more minutes left for this down move, okay, then if let's say we are looking at a 4-hour chart, then it might be even 2 hours 40 minutes. So we may see 2 hours 40 minutes of weakness. That means minimum is 40, maximum is 2 hours 40 minutes. So that's the clue I have right now. So now what I'm going to do now is I'm going to go for another sell, just 0.2, and sell at 60.5 and stop 64. And this one I don't hesitate, I'll just put it as 55 as my thing. So it's already moved up to 61. Okay, so which means to say I can hit a better level. Okay, sorry. Okay, now it's coming back. Okay, I'm trying to sell 0.2. So here I'll try to put 64, and this one I'll exit at 55. No hesitation. Okay, no hesitation for this. No secondary thought on any other things. So we will do. The only thing is, if I'm right, I'll make another $5, which is another $100 extra. Otherwise, if let's say the price moves back and let's say it moves back, then I may lose this $100 extra, because the other one is going to be a break even. So I would be fine on this trade. Okay, so now the other one, all I don't want to do anything. I don't want to do any add-on, because I feel, because I got stopped out, so I got to be a bit conservative. Okay, a bit conservative. And you see, now you see the swings are so nasty, so it can just come, you see, very fast. The thing can come, and now I think we are going to get stopped out on this. So this is the problem with nowadays trading, so we got to be ourselves uh, very alert, and we should be able to take decisions then and then. Okay, so if you look at the chart, you see, I mean, I don't see the reason why, if this is showing weakness, I don't see the strength, from 56 all the way to 63, $7 within this. I think we got stopped out already. Okay, so that means to say that this is not the high. Okay, looks like this is not the high. Then we got to wait for another round. Okay, so now we already got the first entry. We're supposed to get break even. So now we have lost that trade. So now we just have to, nothing we can do, we just have to wait for another entry. So meaning to say that okay, we felt that this is going to be the high, but it doesn't seems to be the high, so we got to wait for some more time to cash it. Okay, so I think that was also out, that 64. So now we are back in red. Okay, so now let's try to do one more round. Okay, this one more round at 70 is where we are expecting this market to turn. So if the 70 at 70 75 breaks, then definitely today is not the day. Then we got to come back another day with another plan. Okay, so now looking at this, let's wait to see whether the price is going to turn. Okay, now we are seeing, let's say we go back into the chart. Okay, so now you see the picture change already. Okay, just now it was trading below the open. So now looks like this is not the high. So now we are expecting the price to push higher. And now the strength can be for another 30 minutes. So can you see the difference? See, just now when we see the price trading here below, we were expecting the weakness to last for another 30 minutes. So now the weakness has changed into a strength, and now we have to wait for another 30 minutes to see and expect the price. Sorry, this is a gold Aussie I'm discussing. Sorry. Okay, now we look at gold US. So the gold US, so the same scenario. So just now it was trading below the open, and it was the 15-minute was showing weakness. That means this low was lower than this 15-minute low. So we were expecting this market to come off, but it tricked us again. So now looks like we are going to see the price moving above again. So now what do we expect? If the strength were to last, we will expect the strength to last for another minimum 30 minutes or another 1 hour, which is 1 hour 30 minutes. Okay, so this both are possible at this moment. So that means we can expect the strength to continue for another minimum 30 minutes, then the market may turn, or it may go higher towards 1 hour 30 minutes, then the market may turn. And the turning point can be either at 70, 72, 78. Max is, I'm looking at 90. So I think we got to get ourselves prepared for tonight. Even 90, then the market may turn, because you look at the 15-minute moving average. I don't think it can go up to 90. So maybe around 75 or 80, 85, I think, then we should see the market turning down. based on the RSI. I'm just giving you a projection. Okay. So that's about it. Looks like another unlucky day, but sometimes this happens. There's nothing much we can tell ourselves. Especially market can be very fast moving. Up down. And if we are not careful, then we pay a very big price. You see here, even this 15-minute from the low of 43, just it can go up to 53, just $10 in matter of just 15 minutes. So the opportunity is there always. Okay, so that's the thing we have to take note. Okay, let's see the gold. Okay, our gold Aussie looks weaker. So we are got stopped out. Then we have to wait for a re-entry again. Okay, there's nothing much we can do. Okay, so any questions? So sometimes this happens, so I think today looks like today is a down day for us. And always remember, the usually Monday and Friday, these 2 days are a bit tricky, and it's a bit difficult to trade. Okay, these 2 days are always difficult because sometimes we expect market to be closing on the weakness. The market can go on the other way around. Okay, so we are, for those of you who have just joined, okay, we are holding 2 trades, in fact 3 trades. Okay, dollar yen, just now we went for a trade. So then gold Aussie, okay, we are short, and we just feel that this market is going to turn down. Then gold euro, okay, but of course we get stopped out. Then we will try to reassess and go for a re-entry. So the gold US right now is 64. Okay, it's trading at 64, and the 1 hour chart is a mixed. Okay, mixed. You see, this is where the problem is. So we may see the weakness coming from here, because if this is a failure, this is, I see, you look at this 30 minutes chart. So if the 30 minutes is going to come down from here, and if this is the high, then possibility that this is going to be a temporary high. So like if we get stopped out, I mean, there's nothing we can do, because we cannot be going on getting stopped out, then we pay the price. So we have to wait to see a confirmation, then we can hold on to the trade. Until then, you see, you have to trade with confidence. That's the main thing you must understand. Just know what you are doing, and you must also know what is the market is doing, and what do you expect the market to do before you get yourself into the trade. Have a plan, execute the plan. Okay, you see, like as I said, see, being stopped out is quite norm. So we don't have to get panic. The moment once it gets stopped out, and also the stop is there. That is like like a safety belt, when when you drive, or when you ride a bike, that's like a helmet. So it is there for you to use. So use it, use it. Then sometimes, if you feel that you're holding too many too many trades are going against you, then you may want to cut loss. Then you decide to close. So as long as the stop is there, you don't have to get panic. Wait for the market to turn, and if the market turns, then you go for additional trades. Okay, so right now is 50-50. If you ask me what is going to happen, I still feel that this market can turn down from here, because the high just now we projected for the gold US was 65, and the high is 65.35. So the problem here, what I feel is, it is not giving us a chance, or it is not, because we should see, okay, we should see the price. Okay, so this is a conservative target or conservative resistance we are looking at, is between 65 to 68. Okay, but of course, if a bit aggressive, then 73, 74 should be your next major resistance. So as of now, it's still 50-50, so nothing we can do. If we get stopped out, then we go for a re-entry. If not, then wait to see whether the market turns down. Then we go for a add-on entry. Okay. Okay, any questions or anything you want to discuss? So as of now, we still feel that the next selling level I'm looking at is at 70 or 72. Okay, that's the level we are looking for a sell. But of course, the market may turn down from here. But you can expect the strength for another 20 minutes minimum. So if it's a 2 hours that is going to control, then it will be like 1 hour 20 minutes. So that means to say that for the next 1 hour 20 minutes, we can expect the price to creep higher. That means push slowly higher. So both are possible at this moment. So we can't do anything. So we just have to wait until the market turns. And we just have to closely monitor. Then the moment once the market starts to turn, then you hit the market, then you try to take back your losses. Okay. So any questions? If not, we can end the session, or anything if you want to ask. We'll just see this coming to a weekend. So we still we don't want to go for a buy now. Okay, the reason being is, okay, this pattern itself, okay, this pattern itself here, okay, this pattern is not showing strength. So which means to say a market is expected to go up, then eventually the price is expected to drop. Okay, eventually this price is expected to drop. So if you ask me what is the maximum, okay, the only clue I can give you is a retracement of this level, which is 36.90, and extension of this level, which is 36.90. Okay, higher. So that means the market can go up to 36.90, then it can be a big drop. Okay, but as of now, we can't gauge anything now. Okay, so here, so I think I've okay. Let me draw a projection. Yeah. So if you if you look at the projection, sorry, that 3690 seems to be a strong resistance. So if this is not a weekend, then we can just place the order to sell at 3690 GTC order, then we'll do. But since weekend is coming into play, then we will try to wait until Monday, then we can see. So maybe Monday, the price can go up to 3690, then market may eventually turn down. Okay. So I think that's about it. Any questions? If not, then we will try. Okay, now before I end the session, I think I have to give a TP for this two. Okay, this two I have to. Okay, I want to exit at 3106 or 3104. Okay, so this is not much that is available, so we just have to put this as 3106. Then for Aussie, 5548 or 5542. Okay, so we will put it as 5548. So all the levels we put in is, we'll just put in such a way that, like it can work even while we are not monitoring the trade. We should be able to hit our target and exit. See, that's why the rule of the game is you should put your TP in such a way that the order get filled, and of course it should be your maximum TP that is available for you. Then stop loss also must put it in such a way that you don't get stopped out when your view is right. Then entry also must be in such a way that you get the best price that is available for you to take the move or take the decision. So now if you notice here, so the market has got no strength to go up. Okay, market has got no strength to go up. We just got stopped out. So now if you look at this 1 hour, this 1 hour is going to end in another 15 minutes, which this is if it's going to close somewhere nearby, then it becomes a doji, So but when you look into the 2 hours, then this might give you a different picture. Okay, 2 hours, if let's say we are looking at the extension of this level as a as a price target, then I think we should be able to see 70, 72 before the high is confirmed. So both are possible at this moment. Okay, so meaning to say the market may come down from here, this is possible, or for the next 1 hour 15 minutes the price may start to creep higher, then the price may hit 72 70, 72 or 75, then the market may turn. Okay, both are possible. So now since I got stopped out second time, so I don't want to go for an entry now. If let's say I don't get stopped out just now, then definitely I would go for a trade now. That means I'll go for, because there's only 15 minutes left, then I'll go for a sell, then I'll try to fight this, because even if you sell at this level, current level, you should be exiting. Okay, just now remember I told you the TP we put at 53 and 55. I think the low it was 56 half. So it's a bit mixed and choppy. Okay, so I think that's about it. If you have any questions, if not, then good luck to you guys. Have a great weekend, and I'll see you all again next week. Okay. Okay. Thank you. Bye.